right. Hello, everybody. Thanks for coming to our 8th AMA, second AMA with Centrifuge and the Tinlake team. Very excited to have them back for this technical deep dive. Thank you all so much for joining. And to get started, I wanted to talk about a couple of things that were brought up last time, kind of as follow-ups, hopefully. And so first thing was we kind of touched last time on how we've been starting with low debt ceilings to try and kind of scale things up and whatnot. And partially because this is sort of in a prototype phase, so to speak. I was curious if you would consider from a technological perspective yourselves as in more of like a V1 or V2 at this point or something along those lines.
So maybe is it okay if I give a super quick intro, Jerry, and then we can talk about. Yeah. So for anyone who's new on the call or to Centrifuge, and sort of the focus, what we want to talk about today is the smart contracts that enable a large part of what we're doing. And what we're doing is we allow sort of an asset originator to originate different loans to different people at different terms with like different default rates and interest rates, different risk, and then bundle those into what we call pools. Those pools have the ability then to take on different investors that buy tokens in these pools to advance money to sort of lend that money to these different borrowers. And so this gives you in sort of traditional financial world, it's called securitization. You take different assets, you put them into one bucket, and then you sort of issue a security that represents a share in this bucket. And so the Tinlake smart contracts allow us to do all of this on chain, where like different investors pay into a smart contract the Dai that they want to lend out, and then they get an ERC20 token that represents their share, and they can sort of completely by themselves in an automated way go back to the pool and get their investment back out by sort of returning those ERC20 tokens. That's like the very high level description. And sorry for the background noise, but as an overall sort of that's the simplest description of what the Tinlake smart contracts do. And so like maybe we can build up a bit around the questions and go more in detail. You brought up an interesting point on like what the maturity is, or like what the pilot is, like how we're building this out. The reality is we've been working on this together with Maker for over 2 years now. We did first transactions actually back when single collateral Dai was still live and multi-collateral Dai hasn't shipped yet. And at the time there was no, it wasn't really collateral in Maker, but we already did like first transactions just settling these assets in Dai. We then started working together with the protocol engineering team to figure out a way how we onboard this as collateral. And so it's an ever evolving process, but I think we've gone over like a few iterations where we're now at a point where actually from a technical perspective, this setup is definitely scalable. It's been audited multiple times. It's been deployed several times for different pools, and we're sort of looking at, okay, how do we set up everything else around it so that we can actually get to the scale that we want to get to. So definitely past V1, I would say. Of course, this is we were the first real world asset in Maker as collateral, and so for the Maker community, of course, there's a lot of like firsts here as well. And so I think that's like the place where we're still doing a lot of work together, is to figure out exactly how we handle all these different situations as they come up, both on a technical and process and legal level.
Okay, so go ahead.
Yeah, and maybe just sort of, I wanted to also like mostly quickly introduce Jeroen to the call. He's maybe a bit of a new face to the Maker community, but is one of the engineers behind Tinlake, who's been building a lot of it, and knows it in depth, and is going to be hopefully take most of the questions and sort of walk you through all of it. And so I just wanted to get him a quick opportunity to say hi.
Yeah, hi everybody. Like Lucas said, my name is Jeroen. I'm an engineer on the Centrifuge team, focused really on the smart contracts of Tinlake and some of the things around it. I was thinking of like walking through a few things today, but also happy to answer any questions that everybody has.
Did you have slides or anything like that you wanted to share, or just?
Yeah, I really wanted to leave it up to like the group here. I was thinking of like demoing a few things in our UI and then maybe sharing, like explaining a few of the core concepts. I know there were some questions last time about the NAV feed in our contracts as well as the epoch mechanism. So I can use, like I can demo and walk through that. I'm also happy to just answer questions, whatever you think is best.
Absolutely. I think that would be a great idea. Let me just give you screen sharing permission real quick. And should be good to go.
Alrighty. Let me know if this works.
Yeah, looking good.
Great. Okay, I will give a bit of a high level overview first of what Tinlake is and like how our pools work. I'm probably going to say some things that some people here already know, but just to make sure that we're all kind of on the same page. So basically, Tinlake is it's an on-chain securitization protocol. So if you go to the Tinlake app or tinlake.centrifuge.io, you can see that we currently have just over 21 million TVL. We have, I think, 10 pools or so live. So every one of these pools is one kind of asset that we're working with, and it's and you can see that, for example, for TuneNAV, that's also one of the pools that is working with Maker, and it just got onboarded, I think, a month ago. Currently has 1.3 million in TV in value. There's a list here of assets that are kind of in the Tinlake protocol. So revenue-based financing is one of them from TuneNAV, but it's quite a wide range. There's also consumer loans, there's supply chain financing, there's real estate, there's soon there's going to be farmland in the US. So I think that's pretty cool to see kind of the diversity of assets already in there. So for each pool, if you click on this, if you click on it, you go to the pool overview, and there's a few metrics here at the top that I think give a good overview of what this pool is about. So you'll see the asset type, revenue-based financing in this case, and you'll see the underlying maturity. So this is basically from the time that the loan is originated, how long it's going to take for this loan to be paid off on average. So this is a medium-term loans in this pool. Then you have the drop APY, which is kind of the return for the senior investors, and I'll explain more about that later. And then we have the pool value, as I mentioned before. So specifically, this pool is actually already, so TuneNAV has gone through the Maker process and as a Maker fold. There's a 50 million debt ceiling, which they're soon going to use. But yeah, that's super exciting to see that going live. If we scroll down here, this is what gives, I think, a pretty good overview of kind of what is in the pool right now. So you can see this is basically a kind of a balance sheet view of the pool. So on the left side, you have the assets. So you have the asset value at the top, 1.3 million. What this number is and where this is coming from, that's what I'm going to focus on later. But for now, let's just say it's 1.3 million. There's 6 assets in the pool, on average 200 something thousand Dai. The average financing fee of each of these assets is 15%. So that means the borrower on Tinlake is paying 15% interest on a yearly basis. And there's currently almost no reserve in the pool. So that the reserve is the money that's in the pool that's not currently allocated to assets. Before I go on, like if anybody has any questions, like please just interrupt me, or maybe Jerry, if there's any questions in the chat also, you can let me know. So the left side is the assets, right side is basically the liabilities. If you look at it from a financial perspective, so every pool in Tinlake is made up of 2 tokens, a drop token and a tin token. A drop token is what Maker is investing in, and it's a senior tranche, which means it's protected by the tin token. Basically, if there's going to be any losses in this pool, the tin token takes these losses first, so the drop tokens are safer and more protected. this also means they have a slightly lower yields, but a more stable yield and a more expected yield. And it's worth noting also here that here you can see this minimum of 10%. This basically means that in this particular pool, the drop tokens are protected by at least 10% of TIN. So at least if there's 10% of losses, that should be covered by TIN. Specifically, I wanted to also show the assets page, because this is pretty, I think, it's not probably the page that most people look at very often, but it's quite unique because if you compare this, what we're trying to do with traditional finance, if you have securitizations, these assets lists are not going to be public. They're not going to be in a fancy UI. They're going to be in long spreadsheets, and you can't just kind of see easily what's going on. But here you can, for any pool, like anybody can go to this UI and just check out what are the assets currently in this pool. So you can see 6 assets, certain financing days, maturity dates, amounts, and so on. And if you click on them, you can even see a bit more information. Yeah, that's on a very high level what Tinlake is. So the 2 concepts I wanted to focus on and discover: asset value and how the NAV is calculated, and the epoch mechanism. Before I dive into that, are there any questions already?
Would like to open it up. If anybody does have questions, please feel free.
I mean, it's fine. I can start with the
Continue.
NAV calculation. So what's pretty crucial for all of this to work is that we need to know what is the current value of the assets that are in a pool. And so we have this list of assets in the application. Let me go here. So I want to go through an example of what might happen. So let's say we have a pool with currently 3 assets. One is due in a month, 30 days, one in 2 months, and one in 3 months. And each have values of 960, 966, and 933. So imagine that these are Dai currency values. So these are expected cash flows. So in 30 days, we're expecting that 960 Dai is going to be repaid by the borrower. The question is, so you have this pool of 3 assets with 3 assets due in the next few months. What is that currently worth today? And so the way to calculate this, and the way that's traditionally calculated also in traditional finance, is using what's called a discounted cash flow formula. So basically, the first thing we do is we look at what are the kind of risk profiles of these assets. So here we're kind of adjusting the cash flows for this risk. So basically, we're saying for this first asset, this is relatively risky. So we're already kind of assuming that 4 Dai is going to be repaid less than this. So the reason this works is because, like Tinlake pools, you're not investing in a single asset, you're investing in a portfolio of assets. And so individually, it's very hard to say whether something is going to be likely or unlikely to be repaid or how risky it is. But on a larger portfolio, you can start to do a statistical analysis and start to figure out and start to apply risk analysis to better predict these kind of cash flows. So yeah, basically we're saying for each of these assets, we're adjusting them for what the risk of each asset is. And then what we're doing is we're using this discounted cash flow formula. I don't think it's necessary to go fully explain this now, but basically we're saying an asset that's due in a month from now, that's quite risky, is worth slightly less today. So in this case, we're saying 956 Dai in a month. It's currently worth 948 Dai. And we do that for all the assets, and then basically we sum up these values. And so what I've explained so far is exactly how it would work in traditional finance, and you'd use Excel probably to do these calculations. But what we've actually done at Centrifuge is we've implemented a smart contract that takes all of these asset values, takes all of the maturity dates, all of the risk scores, and then per second is able to calculate what is the current NAV of this pool. So at any time you can go to the Tinlake UI, you can check out what is the current asset value, and that's going to grow hopefully over time, and it's constantly changing, and it's calculated by the smart contract. So as long as you trust the smart contract, you're able to trust that the asset value is at least calculated correctly. this is probably quite a lot of information. Again, for some people, maybe some repetition, but for others, maybe a lot of new things. Let me stop quickly again if there are any questions.
Yeah, Alejandro has a question.
Hello, everyone. Can you listen to me?
Yeah, I can hear you. Yes.
Can you hear? Can you hear? Okay, my name is Alejandro Diaz. I am a software engineer, and I working in a Chilean company called The Last Bit. And we work in this world of digital financing, and we are doing a research about this technology. So my question is, or one of my questions is, one Tinlake pool can be connected to more than one asset originator, or this is a one-to-one relationship?
Yeah, that's a really good question. Actually, something we're working on a lot right now. So if you look at our current pools, most of them, it's a single asset originator for the pool. But actually, we're really focused right now on moving to a model where there's an issuer that's managing the pool, and there can be multiple asset originators in this pool. And the reason for this is that there's a combination of reasons for this. It's for one, just managing a Tinlake pool is a significant amount of work. And so the kind of sharing this work or kind of assigning this work to somebody that's specialized in this is very helpful. It's also a way to improve kind of diversification of the pool. So if you have multiple asset originators in one pool, you're kind of having different assets, having different risk profiles. That's ultimately better. And then it also aligns very well with, I think, with the MakerDAO strategy of kind of having larger pools that are kind of professionally managed and have multiple asset originators. So it's a really good question. Currently, most are single asset originators, but in the next few months and the next year, you'll see more and more pools where there's one issuer and multiple asset originators. And I think if you go to the Tinlake UI, the gig pool, if I'm not mistaken, is the first pool that's using this new concept. I hope that answers your question.
And for TrueNAV, yeah.
And of course for TrueNAV, yes, exactly.
Yeah.
This is a hard topic because a node, the owner of a node needs to control how to create the documents, how to mint the NFTs, and how to public in the Tinlake pool. So you need to control all the flow. So if you have many pools, how can you connect that to one single Tinlake pool? There is a lot of work here. There's a lot of work in that topic.
Mm-hmm.
Thanks.
Yeah, of course.
Is that the case though? Is there a lot of work? I mean, sounded to me like Alejandro is saying that from his end, he's going to have to mint the NFT, and if I understood it correctly, is that the case?
I mean, I think there is an amount of work that's special to running a Tinlake pool. Just like if you're running a kind of a credit fund, there's also a lot of work for that. I think currently there's a lot of work, not just on the technical side, but also on the legal side that you need to do. Specifically on the technical side about minting NFTs. I would say that's something we're very focused on making as easy as possible. We have a kind of an app that we call Gateway, which is specifically for asset originators, which they can use to create new assets and originate new assets and mint NFTs for them. I think the user experience of that app is something that we're constantly working on. So over time, it will be easier and easier for asset originators to actually use Tinlake.
Got it. So if I'm a pencil manufacturer in Panama, it might be a little bit difficult. I mean, I get the legal side, I get it. It's always difficult, the legal structure. Okay, cool. Yeah, so I guess we're not quite there yet, but eventually, hopefully, it will be easier for a pencil distributor in Costa Rica to use this. Cool.
Yeah, for sure. And I mean, what we really hope is that they might not necessarily need to use Tinlake themselves. They might go through an issuer, like we discussed. So like one of our issuers might create like a technology solution that kind of simplifies the process for them, and then use Tinlake as kind of the underlying infrastructure, but has an easier to use app that the asset originator, the pencil manufacturer can use. Alrighty. Any other questions, maybe on the NFV or anything else?
Brett.
I have another question.
Yeah. So, Jeroen, you were talking about the striking of NAV. Could you just like a little bit more color on that process? It sounded like that was done by Centrifuge or Tinlake, or is that the asset originator or like some third party valuation firm?
What do you mean by the striking of the NAV?
Like with each of these pools has to value the net asset value at each window in time, and then you were kind of describing how you do re-underwrite the portfolio to come up with the value of the pool. Are there any plans to kind of work with like a third party, an independent third party firm that does that?
I think that really depends on the pool that we're talking about. So the NAV calculation is something that happens on chain by the Tinlake smart contracts, but it's based on the parameters that are set per asset, so the value, the risk score, and so on. How that's set and who's involved in setting that is a process that depends on the pool, and it's also something that I think is evolving. I think right now it's often something that is a responsibility of the asset originator or the issuer. But I think, and probably Lea or Lucas has some more color here, some pools are working on kind of adding independent parties to this process. A big part of that, and I don't think we have time to talk about this today, is we're working on a new concept for improving this further, which we call the Underwriter Token. So this is basically a way to add an incentivized role to the system, whose responsibility it is to underwrite the individual assets in a pool, and kind of provides kind of a third-party role in the system. If you Google Tinlake Underwriter proposal, there's a write-up somewhere of our team member Cassidy, and we hope to we're starting to work on this, and we hope to release this probably as soon as we can. But that's going to take a bit of time. Yeah,
Definitely. Yeah, I did see that Underwriter Token write-up. That looked super interesting. And and I'm sure a part of it too, is scale, because like an independent valuation firm is just an extra cost. And at some point it isn't worth it.
Yeah, I think that's definitely true. And I think, again, that's another reason why the issuer model that we're trying to focus on now makes a lot of sense, where you have a separate issuer that's managing the pool that has multiple asset originators, where indeed you're able to achieve more scale, and then these things start to make a lot more sense, for sure.
Yeah, I think sort of thinking about scalability is really sort of saying, if we growing these pools, like setting up like $500,000 in like engineering and legal expenses to pull in external data sources for a pool that's like $2 million in size, right, is a little bit unreasonable. But as you sort of start thinking of how you can grow this like 10x, 100x, right, it becomes more relevant. And yeah, I mean, I don't think going into specifics of what these data sources will look like, this is definitely like a question that all of the asset originators that we're talking to are sort of looking into, but also like work that we do together with like the people in the maker community that do these risk assessments, because they usually also have an opinion of what they think are good data sources and which ones aren't. And then really it's going to be to see for everyone like where we can get the most bang for the buck here upfront and sort of early on, and we'll definitely add start doing that over the course of the next couple of months, I think.
Yeah, that all makes sense. Thanks, Lucas.
So Aaron here, really fascinating stuff. Trying to keep up with all these details as we go here, but my question's around, there's on-chain and there's off-chain data here, right? So if we're looking here at this diagram of the risk adjusting of future expected cash flows, you can try to be as granular and informed as you can about that risk adjustment to those future cash flows. But what about events where the off-chain data, so maybe the actual payments of the mortgages, goes out of sync with what's represented on-chain? So an example would be, what if the risk adjustment score, for the 30-day cash flow or the 60-day cash flow was off, and the payments that were actually received was way under? Would there need to be an adjustment, and how would that flow through to the drop tokens? Would you potentially see drop tokens that are adjusted downward, and how would that work?
Yeah, that's a really good question. So maybe first a little bit of an overview on what's on-chain versus what's off-chain for Tinlake. So what you can see on-chain is basically per asset all the data that's needed for this NAV calculation. So you can see the value, the maturity date, the risk score. But as you very rightly point out, this risk score is based on a lot of other data. But for clear reasons, not all of this can be public information. So we actually have a peer-to-peer protocol for kind of sharing or for distributing this kind of off-chain data on an asset level. So when an asset originator is creating these assets in our gateway app, they're entering a lot more information that's going to remain off-chain, but can be shared with some parties, kind of what goes into the risk score. And so this information, for example, is shared with Maker, with the Maker RWA team. There's events where maybe the value of the underlying house for a real estate pool could go down, or due to kind of macro changes, the risk score might go up, or it might become more risky. And so the way this works is basically on an asset level. The Tinlake smart contracts support a way to update either the value of the underlying assets, so the collateral, or to update the risk score. And so if the risk score of an asset would update, this would be reflected in NFV. So if the asset becomes higher risk, the asset value would go down. I hope that answers your question.
Yeah, and then I guess just carrying it a step further, if you did have a downward adjustment, I guess thinking of other Maker collateralized debt positions, right, where you have real-time price updates on chain. If your collateral is Ether, for example, I could foresee an event here where you'd have a lag of, let's say you needed a downward adjustment, but there was a question mark around how severe that downward adjustment needed to be. And then my next question would be around, over collateralization. So how much Dai is being minted against these assets relative to the value of the underlying collateral? And is there a buffer in there for this sort of potential problems, right, that could come about?
Yeah, for sure. So you're absolutely right that there is a bit of it's not the same as on-chain crypto collateral in terms of price updates. It takes a little bit more time, but there's also like pretty significant protections built in. So there's basically 3 levels of over-collateralization in the Tinlake protocol for the Maker vault. So on the most granular levels, every asset has an advance rate, and so against the value only, let's say 90% of the value can be borrowed. So that's the first kind of level of protection already. Then we have this senior junior tranche structure where the TIN token is already protecting the drop token for, let's say, 10% of the losses. And so Maker is only investing in drop. So Maker is always protected by this TIN buffer. And then thirdly, what specifically Maker is, or the Maker vault is receiving an additional level of collateralization. So I don't know the exact numbers off the top of my head, but I think, for example, for New Silver, the largest Tinlake pool with Maker right now, I'm pretty sure there's 105% over collateralization. So basically, when Dai is drawn, actually 105% of drop gets moved into the Maker vault as collateral. So basically, there's the asset level advance rate, and there's the TIN buffer, and then finally there's a Maker specific over-collateralization. So a lot of that is also to protect against price stops.
Got it. So part of the over-collateralization is built into the mezzanine tranches. It sounds like with TIN, if you're a drop holder, understood there. Who holds the 10 tokens? Yeah.
That depends per pool. I think for all pools, the asset originator or the issuer is holding some TIN tokens, if not the majority of it. And then sometimes they're also able to. There's other investors are able to invest into TIN, but it's not something where there's a lot of. So right now, as a retail investor, it's you can only sign up for the drop token by default because the TIN investing in the drop token requires a lot of investing in the TIN token. Requires a lot more of understanding of the underlying assets and the risk profile. So yeah, it's not as public. But by default, it's at the very least, the asset originator is investing some part in the TIN, so they basically have a first loss position. To clarify, TIN is basically in most cases it's an equity tranche, and rather than a mezzanine tranche, except in some pools where there's also some kind of off-chain equity, so not all of the equity is in a Tinlake pool. And in that case, you can basically see the TIN as kind of a mezzanine tranche.
Okay, and then so that also gets into the skin in the game question around the asset originators. So you're saying that they're also holding the 10 tranches there, so they do have skin in the game, right? If those the investments are not the payers are not meeting their obligations, the 10 holders being the asset originators, there's a connection there.
Yeah, 100%. And I think for all of the Maker, if all of the pools that are onboarded as Maker collateral right now, there's an additional covenant that they need to hold a certain percentage of the TIN. And actually, we're working on an update to the UI that we're also going to be showing is better in the Tinlake UI. So you'd be able to see how much TIN the actual asset originator is holding. Yeah.
Got it. Thank you.
Any other questions?
Yeah, I've got a question. So this model makes sense to me. Question one is, how do you guys settle on a discount rate? And question two is, how do you decide what the TIN buffer is on a per pool basis?
Lucas, maybe that's a question that's better for you to answer.
Yeah, so the discount rate basically is, so this is sort of the asset originator is controlling that a lot. That's not Centrifuge that's doing this, but sort of the math or the logic behind it is to pick a discount rate that is sort of representing the average performance of the loan and the average cost of the capital. So you sort of want to say your discount rate needs to be what your base cost of capital is, because sort of that's the target or the performance it's measured against. So I will post a link on the documentation that talks about this a bit more, but actually the right person to give a much more concise answer here would be Dennis. But actually, Dennis, yeah, you're on the call. Maybe you want to jump in.
Yeah, I'm not sure how my audio. Can you guys hear me? I'm not sure how my audio quality is. I don't have the best wireless, and I'm outside. So first, discount rate, and then minimum TIN risk buffer.
Yeah, the first question is, so you're trying to choose a discount rate. How do you come to calculate your opportunity cost of capital? And the second is, how do you decide on the TIN buffer on a per pool basis?
Yeah, so the discount rate, I mean, there are two approaches or textbook approaches. One is benchmark rate from reflecting cost of capital with a comparable amount of risk, basically, right? This is what we're basically following. So trying to find the expected average financing fee of the portfolio, risk adjusted, to come to the cost of capital to discount this. The other would be like what you also find then is using a risk-free rate. This is the textbook approach. Usually, this doesn't make too much sense in our case here. So we use basically a benchmark rate that reflects comparable risk-adjusted rate, basically, for these types of assets.
Right. So
discount rate is always like you have this opportunity thought behind it, right? That you think like, okay, like I discount it because I could also do something else with my money. So I want a benchmark rate to see what it's worth today.
Yeah, so totally understood. So I guess I just meant like for your particular methodology, right? Like on a new silver pool, like how do you guys at Centrifuge go about figuring out what the benchmark is? And like if, let's say, broader, like the spread above the risk-free rate in the broader markets moves, is that reflected in the discount rate? Or do you just try to choose a benchmark that gauges the opportunity cost of capital at the beginning of the pool and then kind of just go with that? Does that make sense?
Yeah, so first what Lucas already said, like we don't do that, right? I mean, we support obviously where we can with knowledge, but this is in the end also driven by the issuers. And then yes, obviously, right, if interest rate changes, also discount rates would need to change. So if the risk of the underlying portfolio would change significantly, we would need to change the discount rate. If interest rate change and thus the financing fee, for example, right? Like financing fees drop by 2%. Yeah, then obviously also the discount rate would need to be adjusted at some point to reflect this new benchmark.
Cool, that makes sense. And on the tin buffer?
Yeah, tin buffer. I mean, we roughly. It depends obviously on the risk of the underlying asset, right? This is like rule of thumb. The riskier the asset, the higher the tin risk buffer is, and this can depend. Like this can be credit risk. This can also be liquidity risk, right? Like all types of risks that go in there, and then the higher the risk, the larger the tin buffer. I think it's fair to say like this is not a scientific approach, right? We don't calculate a tin risk buffer of 11.782 because there's some model underlying it, but so far we usually go, which is in line with first loss pieces in securitizations and other structures, that you have a junior piece of 10 to 15 usually, and that's what we're using so far.
Cool, thanks, man.
Thanks for jumping in, Dennis. Any other questions?
Think you're good to go ahead now?
I have a question.
Oh, one more?
One more.
Go ahead.
Recently, I hear that you launched or you tried to launch a version of Centrifuge Kusama network. But what are the difference with Amber and Fleet testnet that you already have in your system? What are the main differences? Or what can I do on the Kusama network that I cannot do on Amber or Flint?
Yeah, maybe I will give a little bit of context on what you're talking about because I'm not sure if everybody is aware. So what we're talking about today is Tinlake, which is a set of smart contracts that are living on Ethereum. But we also have our own chain, which is called Centrifuge chain, that is built using Substrate, which is the technology behind Polkadot. And so this is where what we're looking to at some point also to kind of develop Tinlake on at some point, to make the experience better for our asset originators, to make everything less expensive, and to make more complex products possible. So Polkadot has a sister network called Kusama, and we're indeed currently working to launch our own variant of Centrifuge chain called Altair. Difference to your specific question between Altair and existing testnets like Flint and Amber is that as is Kusama, Altair is going to be a canary mainnet. So this means there will actually be real value on this network. And you can see what this happening with Polkadot and the intention behind Kusama as well. We're trying to create a network that allows them to test new features and to experiment with new ideas with some value, but still keep the main network, Polkadot, in our case, Centrifuge chain, more stable and more secure. So yeah, the difference between Altair and Emmer and Flint is Emmer and Flint are just test nets. There's no real value there, but Altair has actual monetary value. Does that answer your question?
Yep. Thank you.
Alrighty, if there are no more questions, we're also going through time quite quickly. Maybe I can take 5 to 10 minutes to walk through the Epoch model still, and then do a last round of questions. So this is a bit of a chart, but it's the best visualization that I found. So our Tinlake pools are what we call revolving pools. So initially, actually, we launched an older version of Tinlake, which only supported static pools. So what this means is that you had at some point the pool would start, investors would submit money, invest money into the pool, and then as the originator would finance assets using that money, and then in the end repay them, and then the investors would redeem their capital, and then the pool would be closed again. But this was very inefficient because you couldn't easily finance new assets. You always had to spin up a new pool. And so we started working on creating a new version of Tinlake that supported revolving pools. And that's what's live today, and what all of our pools right now are revolving pools. The NAV calculation is a crucial part for this to function. And the other part of this is the Epoch model. So basically, at any time, a Tinlake pool is in a certain epoch. Most pools right now, the epochs take about 1 day. In that epoch, any investor can submit orders. They can say, I want to invest this amount, I want to redeem this amount, and they won't immediately be fulfilled. They'll basically be collected during the epoch. And at the same time, as the originators can finance assets as well as make repayments. And these repayments aren't the money that's coming in from these repayments is initially just collected into the pool, and they can't use this to finance new assets. They need to wait for the epoch to close. And this is basically to create a list of priorities for orders to be fulfilled. So at any time, if a drop investor or an investor would want to redeem any of their capital, this should take priority over the asset originator being able to finance new assets. So at the time of the epoch, when it closes, our contracts calculate what amount of the orders can be fulfilled. So maybe part of the, so I can actually have an example here. So basically you have the 4 order types, drop investments, and investments, and the same for redemptions. There's certain locked orders, and then we can calculate what can be executed. And this basically allows investors to add more capital or redeem capital on a daily basis based on the current NAV. And then ask the originators to get their capital available then after repayments for new originations. So this is kind of an ongoing process. Every day there's a new epoch, also handled entirely by our smart contracts. And yeah, that's kind of what enables these pools to be revolving, and what enables investors to be constantly participating, and the asset originators to be constantly originating new assets and so on. I hope that's clear. Any questions about this or anything else?
Looks like.
Hey, I have a question.
Go for it.
You might have covered this earlier, so sorry if it was answered. But what are the steps to get approved as one of these non-bank lenders on the platform?
Lea, do you want to take that question, or Lucas? I mean, I can take the question as well, actually. So you're asking if you want to invest into a pool, what do you need to do, right? If I understand your question.
No, if I want to be an originator,
okay.
A non-bank lender, kind of executing these loans.
That I think maybe Lea or Lucas better.
Yeah, maybe Lucas or me. Yeah. I mean, like, overall, it's like an open system. Theoretically, anybody could spin up a pool or launch a pool in Tinlake. And yeah, I mean, it basically what they would need to do is map their business model, basically, or basically map their business model onto Tinlake. They in order to launch a pool, this is more or less these steps that we went through at the beginning, where we look at, okay, how is the asset originator, or how is an issuer structuring their pool? What is the asset type that they seek to finance? How would it work with the Tinlake mechanics? What is the discount rate? What are the interest rate, etc.? And then we basically help them, translate these into our smart contracts and launch a pool, if that makes sense. But theoretically, it is open to anyone to launch a pool here.
Got it. Okay. Very, very interesting. Thank you.
Alrighty. Anything else that I can answer?
Yes. I have a question.
Yeah, go ahead.
What happens if a pool get empties its portfolio in an epoch? What happens if we have this case? The case of a pool that get empty in an epoch, that its portfolio doesn't have more NFT.
So you mean if all of the assets that were initially in the pool were repaid and there's no more outstanding loans? Is that what you mean?
Yes, yes.
Yeah, so in this case, all of the capital would be unallocated and would go into the pool reserve. And basically, there wouldn't be anything technical that would block the pool from functioning. But you'll quickly start to see that the yield is going to go down, obviously, because there's no interest accruing on allocated capital on a reserve. So I would imagine that all of the investors in the pool, including Maker, would see their yield dropping and would start to submit redeem orders. And if the reserve is the entirety of the pool, then our contract should allow any investor to redeem their capital every epoch, basically. So every investor would probably just redeem all of the capital, I think, would be the likely scenario.
Cool, thanks.
Can I ask a question on, and sorry if it was already covered, I joined a few minutes late, but the relationship here with the NFT tokens, the non-fungible tokens, specifically what those represent in terms of off-chain assets, and then the ERC20 tokens that are minted against those, which it sounds like that's the drop in the tin. A little bit around that process. And then specifically on the drop in the tin, it sounds like they're ERC20 tokens, but there's whitelist limitations. So any color you can add on the transferability around those tokens.
Yeah, for sure. So yeah, any asset that's in the pool is linked to an NFT that's representing the underlying collateral. So this NFT actually is anchored on our own chain and contains basically it contains a link to the off-chain data that's representing collateral. So yeah, any asset in the pool is linked to an NFT, and then the pool makes up this set of the NFTs. And then the drop in the tin tokens you can basically see them as LP tokens. They're basically if you're investing some Dai in a pool, you're going to get some drop or some tin that's representing your share in the pool. And it's also linked to the legal setup, because every pool also has a off-chain legal setup, and basically holding this drop or tin token gives you certain rights as an investor. you're absolutely right that there is some restrictions on these drop tokens because of the legal nature of them. Technically, basically the tokens, which are indeed ERC20 tokens, are just restricted from being transferred to anybody who's not whitelisted. So you can transfer them to other whitelisted investors of that particular drop token. But that's it. You can't transfer them to non-whitelisted addresses for legal reasons. Yeah.
But then, I guess following up on that point, so they're whitelisted, so that means they're restricted. You can't send them to anybody else.
You can send them to other people who are also whitelisted for that particular token. Yeah.
Okay.
You need to have gone through a KYC process as well as have signed the specific agreements for the particular drop token in order to hold them.
Got it. Okay, that makes sense. Yeah, you have to be like within the whitelisted pool. People.
Exactly. Yeah.
Jeroen, a quick question on what you were talking about with the epochs. So it looks like most of these pools are kind of like every day or every couple of days, they're valued, and any new investments or redemptions are kind of netted together. Can you just talk a little bit about like the process of I mean, like, does an asset originator kind of have their own UI on Tinlake, so they can? Is it the asset originator's responsibility to kind of monitor incoming investments and as well as redemptions, and then maybe like a little bit of color on kind of the cash management process to kind of, if there's an inflow, deploy the new capital, and if there's an outflow, have the capital to redeem those investors.
Yeah, for sure. So in terms of managing the epochs, the epochs, although they run on a daily basis, they're not automatically closed. Someone needs to do that. Unfortunately, because of Ethereum gas fees, that's not very cheap. So that needs to be a proactive step. In theory, I think it's worth noting that this is kind of permissionless. Anyone could just close the epoch for any pool. But it's going to cost you some money, and that's probably the biggest reason to not do that. I would say it is the responsibility of the issuer of any pool to actually manage that, and they do indeed have their own UI within Tinlake to do that. And they also get kind of proactive notifications about what's going on in their pool. So they get notifications if there's new orders coming in or if they've not been fulfilled for a while. And it's up to them to manage that. They're also able to kind of signal their interest in capital, I would say. So maybe you saw recently, I think a month ago or so, we rolled out a new feature in the UI where you can see the investment capacity for any pools. You can basically see how much can currently be invested into the drop token of this pool. This is based on a parameter that the asset originator can set. So they can basically specify how much capital do I want to let in. And this is, it's a balancing act between having sufficient capital to originate new assets versus not having too much of a reserve, which will lead to cash drag. We're still working on improving this, though. I think there's going to be more improvements in the next few months in the UI about kind of signaling to investors which amounts of capital are needed. So it's definitely kind of something that we want to improve.
Okay, great. And just one quick follow up on that. Could you talk a little bit about like the on ramp and the off ramp? Like if Dai, if an LP is lending Dai into a pool, is there kind of like a standardized on ramp and off ramp to get that Dai into, I imagine like a bank account of an asset originator?
Yeah, I don't. Maybe Lea can add some color here later, but I don't think we have there's an entirely standardized way to do this. I mean, ultimately, it's up to the issuers or the asset originator of the pool to manage this. I think what most asset originators are doing is they're first converting the Dai, in terms of the off ramp, first converting the Dai into USDC using either the PSM or Curve, and then transferring that USDC into fiat. But that's not something that we're necessarily kind of telling them how to do. It's just something that seems to work best for most pools, I think. Yeah, I don't know, Lea, do you have anything to add there, or Lucas?
No, I think that's pretty good.
I think this is also something where, the issuer model will help. I think over time, there will likely be pools where the issuer is handling all of this, and actually the asset originator is entirely just dealing in fiat, and doesn't really have to be involved with crypto, which will, I think, although it would be amazing if we can convert anybody to using crypto directly, that will kind of restrict maybe it from some use cases. So hopefully over time it will be simplified, and there will be kind of parties kind of simplifying their process.
Yeah, definitely. Thank you.
Alrighty. Anything else? Looks like I think we're at an hour, right? Or Jerry, or do we have any more time?
Yeah, we are at the top of the hour. I'm not sure if you have the time to finish this, at least your presentation slides.
Yeah, that's good. I had a few more slides here that were very technical about the smart contracts, which would take more than a few minutes to go through. I just added them if there were specific questions about it, but I think it's too much to go into now, so it's all good.
Reasonable. I guess we might have to schedule a third one then. But thank you all so much for coming. Thank everybody for the great questions. This will be posted up on the YouTube later today. So if you missed any part of it and would like to go back and review, it will be available on MakerDAO's YouTube channel. And thank you all, everybody, again. Thank you so much.
Thanks for organizing.
Yeah, thanks for having us.